Aluminum prices itself have corrected. In the last 2 months or so, from a peak of $3,800, it corrected around $3,100 per ton. So yes, these numbers look impressive. 10,000 crores of an EBITDA number is what they've done, which is very, very impressive for Vedanta Aluminum. However, what the street will look forward to is what kind of a run rate can they do from here? Because in all probability, the first quarter could be peak earnings, given that they had the benefit of higher prices and input cost will follow with a bit of a lag. So they're focused on the cost side, yes, but that's something that you should keep an eye out on with regard to Vedanta Aluminum. That's why you're not getting that reaction on the stock, though it's come off a little bit from the lows of the day. Listed at around 535 rupees, and now it's holding at around 435 odd.
Yep, that's about Vedanta Aluminum. Just keeping an eye out on a couple of these other buzzers as well. An hour ago, we got the numbers from Mahanagar Gas. That stock's now moved to the high point of trade, sitting at the gain of almost 5%. From the word go, we've seen traction on Balkrishna Industries, so that stock continues to hold well. But today's day, if there was to be a sector, it has to be the auto sector. Today's day belongs to that. We've seen good moves coming in on Eicher Motors, obviously because of the numbers. But now look at Hero MotoCorp, look at TVS Motors, or even something like a Sona BLW or auto-related plays, which are a buzz in today's session. So let's tell you what's lined up on the show today. The stocks are off lows, though the Nifty is flat, inches towards the 24,250 mark right now. The broader markets, consistent underperformers of the day. Autos and IT stocks are the ones which are in the green, while financials and real estate stocks under pressure. M&M delivers an inline show to April in the April to June quarter. Market share gains continue for them. Core earnings remain healthy. A deep dive into what worked for them coming up on closing bell. Alongside that, we speak about Exide Industries that reported a healthy first quarter numbers. We saw double-digit growth across segments, a detailed earnings fine print coming up in just a bit as well. And the start of the day, MTAR Tech locked in 5% upper circuit following stellar first quarter results, and this after a big fall that it saw all of last month. So what's worked, what hasn't, we'll get the assessment up for you as well. Also the expectations from big earnings tomorrow. We have Tata Steel, ITC and Maruti, three major Nifty companies.
Well, how do you position yourself though in the final hour of trade? We have Mitesh Thakkar who joins us to help us out with the strategies. Mitesh, what would you do? We're almost at the same point as we are at around 9:10 when we spoke earlier today. What's your take? Would you say that the markets actually have been quite resilient, given the fact that we had a big run yesterday and we woke up to a little bit of gloomy cues? First the index and then stocks.
Resilient, yes, definitely, Nigel. But I also maintain that the index, will give you a breakout once it sees it closing about 24,400. I think till then we are just in a sideways consolidation. The good thing is that every time we have declined, we've kind of bounced back nicely. But yet, I think the stronger up move will happen once we are above 24,400 and on a closing basis. So then I think, trading on a stock-specific basis looks to be the logical way forward. I have a buy on APL Apollo with a stop at 1870 for targets of 1935. And Nuvama, I think after a long time, is showing first signs of profit booking. If it starts trading below the range of 1800 to about 1795, then take a short with a stop at 1827. Look for target of 1735.
All right, so there's Nuvama, and you had another call as well. Take that point. Let's talk about M&M. In fact, before we come to you once again on the auto pack, Mitesh, that's the one which is gaining in trade after posting an inline set of numbers. Sudarshan joins in with all the number crunching. Sudarshan, they continue to gain market share.
That's true. And overall, if you talk about the earnings were largely in line, continues to maintain a healthy revenue growth. But on the margin front, it has taken a dip, mainly because of the raw material cost increase that we have been seeing over the last few months. And companies talked about in the meet that in the auto segment, if company had not taken any measures, in the auto segment, margin would have been impacted in the range of 400 to 500 basis points. And in the tractor segment, impact could have been in the range of 300 to 400 basis points. But due to the measures taken, the impact was a bit lesser than that. So talk about the headline numbers. Profit has seen an increase of 7%. Revenue was higher by 23%. EBITDA increased by 5%. And margin has come at 12.3% against our expectation of 12.6%. Realization for both tractor and the auto segment has an increase of 1 to 1.5% if you take a look at YOY. And total volumes for both the auto and tractor segment were higher. Auto 23% YOY, tractor segment up 17% YOY. Now in the press conference, company has talked about the tractor segment outlook for FY27. In the first half, they have seen a healthy growth. They believe that H2 can be a bit weaker, and that's the reason they have maintained mid-single digit growth. But that can also be taken very positively, because some of the expectations are of the flat growth for FY27 as far as the tractor segment is concerned, but maintaining mid-single digit growth for the industry is positive, announced by Mahindra & Mahindra. For the auto segment, revenue has seen an increase of 24%. Overall EBIT margin has come in at 7.1%, but this includes e-SUV manufacturing. If you exclude that, then the EBIT margin increases to 8.3% and realization was up 1%. For the tractor segment, revenue has increased by 19%. EBIT margin has come at 18.5%, but core tractor PBT margin was at 19.2%. Here also realization has increased by 1.1%. You are talking about the market share. Company continues to gain market share on a sequential basis. In SUV, they have gained market share by 50 basis points and total volumes were up 15%. In LCVs, market share was up 150 basis points on a sequential basis. Even tractor market share remains healthy at 44.9%. So overall, earnings were largely in line, but if you look at the internals, they are looking strong.
All right, sir, thanks a lot for that. I think the street is coming to terms with, the fact that the stock has been strong. As Sud said, the internals are very, very strong. It slipped a little bit from the top. I'm just looking at some commentary on the wires where they're saying that, the executives that are talking at that conference, they're saying that the second half of the year may not be as strong as the first half of the year, because the second half of the year will be on a higher base as well. So maybe that's caused the stock to slip a little bit from the highs that we saw. Intraday chart should come up for you on the screen. Dilip Bhatt joins us on the show. Hi, Dilip. Good to see you win. What's your take, Dilip, with regard to Mahindra & Mahindra? It's been a rank outperformer. But at these prices, do you think the good news is in the price, or do you believe that this could still be a steady compounder?
Thank you so much, Nigel. It's such a pleasure to be with you all. I think M&M results, I would say that more or less are in line, because if you see, even the valuations are not cheap. They continue to do pretty well without any doubt. I think some margin here and there can make a difference, but I think the growth in SUV and even in LCVs augurs well for the company on an overall profitability basis. Now, coming to the overall, I think the second half, as what we all know, largely due to the GST cut being given by the Modi government, gave a great boost to the entire auto industry. So almost all the auto companies will have a higher second half base, and more so the fourth quarter. So I think that will weigh definitely when we compare the second half of almost all the auto companies. Having said that, I would say that one did not be in a hurry to invest in M&M. I will still wait on the side. Let's look if I can get a better price. But from the current level, I would not look at M&M as an investment for the time being.
Okay. All right. You won't look at M&M as an investment, though. As we speak, there are numbers flowing in thick and fast. This one's from Ajanta Pharma, up around 21% on the company's EBITDA. Margins have seen a slight moderation, which implies that the revenue growth has been slightly higher, but nevertheless, 25% EBITDA growth to nearly 25% revenue growth, 20% EBITDA growth, and the net profit comes up for you as well. The stock's taken a smidge of a spike right now. Net profit is up 31% on low base, so we'll get more details on that one. As of now, the stock high by about 2%. But another stock which is doing extremely well is Exide Industries. Posted a healthy set of first quarter earnings with all segments seeing a double-digit growth. Sudarshan, you've been a busy man today. Batteries now after cars.
All the segments, as I said, have registered a double-digit growth for Exide Industry, and that's reflecting the stock price. If you talk about the headline numbers here also, profit has increased by almost 30%, revenue has seen an increase of almost 18%, and EBITDA has seen a jump of 16%. And despite higher raw material prices, EBITDA margin company has managed to hold on to levels above 11%. It has come at 11.2% versus 11.5% in the same quarter last year. As I've told you, all the segments have seen double-digit growth. So automotive segment growth was of more than 25%, two-wheeler two-wheeler and four-wheeler replacement business has seen double-digit growth. Industrial business too, excluding the telecom segment, has seen a double-digit growth, and inverters business growth was more than 20%. Even export segment has seen a growth of 20%. If you talk about Exide Energy Solution, they have made another infusion of rupees 100 crore, and now total infusion in that company has increased to 4,900 crore. And from the Bangalore plant where they had set up the facility, from that plant, they believe that it will start contributing to revenue in this fiscal, that is of FY27. So overall, earnings are strong. Even on the commentary part, it's looking strong outlook for FY27.
Got it. Okay. All right. Sir, thanks a lot for that. Time to charge your batteries over the weekend, maybe, sir. Thanks for joining in and giving us that quick analysis, both on Mahindra & Mahindra as well as Exide. By the way, the stock that Mangalam just spotted, Ajanta Pharma, looks like that one's got a good amount of momentum going. The street likes these numbers. Profitably up by more than 30%. That number, in fact, is taking the stock higher. They've declared a first interim dividend as well of around 32 rupees. And I think the top line growth as well was quite strong. Let's pull up the margin performance, because for the time being, that's bursting away as we speak. Ajanta Pharma getting a thumbs up. Let me get in Dilip Bhatt. Dilip, you heard what Sud had to say on Exide. What's your view on the stock? And if you have a view on Ajanta Pharma from the pharmaceutical pack?
So as far as Exide is concerned, I think they've always been a very well-managed company, and the current results really prove that they are moving with the times and they are investing a good amount of their free cash into the business, which is what they're doing very rightly so. And I think the new businesses have also started giving a reasonably very good returns. So I think all in all, I would say that Exide certainly merits a look, though it has moved up quite a bit in the last 1.5 to 2 months. I would still say that even from the current level, it holds a promise of at least another 20-25% on a longer term basis. Because if you go to see the new businesses and the investment that they have made, I think the returns will really overall flatter the ROEs and ROCs in the times to come. So I would look at this particular thing because they're generating a very good, healthy cash flows. And even the basic growth, whether OEM, replacement, you call all of them, they all seem to be reasonably very good and promises to be good even for the next 1.5 to 2 years.
Got it. Okay. All right. Thanks a lot for that, Dilip. Just stay with us. Let's do a quick check on the F&O markets. You woke up today, you saw crude oil prices spike up a little bit. The global news piece itself wasn't very, very great, with the Fed chair sounding a little bit more hawkish than what people anticipated. Most factoring in that, yes, by the end of this year, we get a rate hike. And crude oil prices, after cooling off to sub $90 per barrel, they've spiked up a little bit yet again. So giving that sort of a backdrop, if we have a more or less flattish screen, I think that's okay. The bulls will take that. And if you look at the options data as well, it's quite encouraging still, because you'll have to say that the put writing continues in today's trading session. 24,200 put, fair bit of open interest built up out there. And, the premium has come down to sub 90 rupees from around 115 rupees earlier today. Now, the 24,300, beg your pardon, 24,300 call, the premium out there as well has come down to 80 bucks from around 100 rupees. Remember, even when the Nifty was up 50 points, still that premium wasn't moving up. So that's telling you the writers are at play. So in the near term, it appears we're in a broad range. On the upside, it'll be around 24,500. On the downside, it's around 24,000. But if you want to look at the technical, the simple daily moving averages, the 20 DMA becomes the first reference mark, which is very close to today's low, 24,100 approximately. Around the upside, once you get past the 24,500, then all eyes are going to be on that 200 DMA. So that's the important resistance mark that we're looking at. I think if the Nifty needs to move up, the next leg of the up move, Reliance Industries will have to participate. So if you pull up Reliance Industries with the 20 DMA, it's very, very close to that mark. In fact, it's just hit that mark as we speak. So it's showing signs that at around the 1250, 1260 odd mark, there is a good amount of interest. And if we can get past these technical levels, then maybe the stock will be good for more. But the short point is if Nifty needs to get past that earlier resistance mark of 24,500, Reliance Industries is going to be the stock. There is a good amount of delivery-based buying, and there's some fresh long build-up as well. The other one I'm looking at is, Union Bank. That's another stock that's done absolutely nothing for the last, 1 month or so. If you pull up a 1 month chart, and I'm looking at the open interest build-up, it's quite substantial actually on that sort of a base. So Union Bank is the other one that you're looking at. Last 1 month, as flat as can be, the Nifty Bank has bounced back. And now you're seeing some fresh buying as well. Reliance Industries and Union Bank to track. On the Nifty, it appears we're in a bit of a range. That said, the actions in the broader markets. MTAR Tech, one day up, one day down. Today it's up. Remember, Bloom Energy came out with its set of numbers and they upped their guidance. And MTAR Tech itself, the execution looks quite good. Let's get in Ria to help us out with a quick analysis. Ria?
Well, yes, today MTAR Technologies is reacting to a strong set of earnings in Q1 of FY27. It's been a strong quarter all around with the revenue, EBITDA, margins, net profit all seeing a beat on estimates on all fronts. And this is driven by strong execution across business verticals of the company. The revenue has seen a growth of nearly 130%, EBITDA up by 200% compared to the previous year. Margins also seeing a very strong expansion of 540 basis points this quarter. And the net profit also seeing a significant bump up by 348% to nearly 50 crores in this quarter. So it has been a strong quarter all around for them. Now, what stands out is the order book. The order book has crossed 5,143 crores in this quarter, which has already surpassed the FY27 guidance that the company had given. And in fact, today, the company has also received another incremental order of nearly 820 crores. So that is also another further bump up to the orders. In terms of the guidance, the company has retained its FY27 guidance. The revenue growth guidance is at 80% for the year, with EBITDA margins expected to be at 24%. And today, in an interview, the management also said that they expect to surpass this guidance that they have laid out for FY27, and they've said that they will be revisiting this guidance at the end of Q2, and H2 of FY27 is expected to be stronger than the first half. And further, they've also said that they are looking at scaling margins in every segment of the company. The order pipeline also looks very promising for them. In fact, the clean energy segment, which is 70% of the revenue of the company, is also growing at a very fast pace. And in fact, in terms of the concerns surrounding Bloom Energy and their data center projects, the company has said that these are unwanted worries and there is no impact on the operations of the company as of now. So overall, strong set of numbers for the company, strong commentary as well. And today we are seeing the stock hitting an upper circuit of 5% after the near 40% correction that we saw over the last month and a half.
Take that point. Thanks a lot for that, Ria. Meanwhile, for the market, just keep an eye out on the IT pack now. It's been a strong supporter of the frontline index, but now coming off the highs. Currently, the IT index is at the low point of today's trading session so far. We have Infosys, which has moved lower, and alongside that, we have TCS as well. So both the IT heavyweights come up for you. The IT index actually has given up nearly all its gains. Remember, it's been a rank outperformer over the last week and a half, maybe almost a month as well, but not beyond that. Before that was an underperformer, but now it's coming in for some profit taking. Continue our conversation with Dilip. Dilip, your thoughts on MTAR Tech, and also, would you bite into this mild correction from the highs that we're seeing in the IT pack, given the sort of momentum that we're at?
A couple of things over here, Mangalam, that one is certainly the IT pack has moved into one of those typical sectors like the FMCGs and the chemical sector, where we will see momentum happening at certain points of time, whether it is for certain news that comes in for the industry or some development abroad. So I think whether there is going to be a very secular, sustainable move, obviously not. Even you're asking whether you're going to bite into it on a short-term basis. Maybe that would be the right strategy, but since I don't really understand the short-term movements, I prefer to stay away. But otherwise, as what I would say, this entire pack continues to be very good, because we have once again seen all these companies are very well-managed companies. They look very attractive. But the question is, the sheen has really gone off the entire software companies in India, because no more India is the USP in terms on an overall basis in the world. And certainly, as what we know, that the international peers are trading at a much more attractive valuation than India. So maybe short term, it could still be a buy, and it could provide plenty of such opportunities all throughout the years. But otherwise, I would prefer to stay away from tech for the time being.
If someone had bought and they're sitting on either a flattish number or maybe some gains, would you advise them to sell?
You mean the IT?
Yes.
So what I would say is that as a slightly providing some resilience to the portfolio, maybe I would say that even if you're holding 100, at least you must retain 50, because the growth on a sustainable basis is very difficult to come by for IT in terms of the stock prices. Maybe it could provide some resilience because some of them would become attractive from a dividend point of view, dividend yield point of view. And as what we always say, the cash flows are very good. The conversion from operating profit into cash has always been one of the best for these companies. and as it is, they're very well managed. So
Okay.
certain portion you have to retain to give defense and resilience to your portfolio.
All right, defense, hang on to what you got, but maybe buying fresh, you could wait some time. Thanks a lot, Dilip, for joining in and giving us your quick take on all the stocks that we discussed.
Always.
Time to take a short break. On the other side, we have our Alpha Manager of the Day, Ajay Tyagi of UTI Asset Management, will be joining in. Stay tuned.
Republic.
Welcome back. We're talking about the market now bouncing back a little bit. It's up 25 points. When we started the show, it was down about 13 points. So it's been volatile in that range, and now the mid-cap index as well. A large part of the up move can actually be attributed in the last few minutes to Maruti Suzuki. That's the one which has moved to the high point of trade. Reports its numbers tomorrow. A big surge is what we're seeing on that counter, up from the lows, and there you have it, zooming ahead. But another stock which has been doing well is MGL. Reported a good set of numbers just a couple of hours ago, and despite the ongoing West Asia crisis, the stock is now holding up with a gain of almost 1%. At one point, was up about 5%. Sonal joins in with the details of these numbers. Sonal.
Well, the stock has come up from the highs, but it was a good set. There are no two ways about it. On a sequential basis, it was a decent recovery. Revenues up 15.5%. We did see an EBITDA growth of 32% on a quarter-on-quarter basis to come in at 343 crore rupees. The margins have improved as well, 200 basis points. This is at a time when gas costs had increased substantially on a quarter-on-quarter basis, and there were gas availability issues as well. Profits were up 49% to come in at around 193 crore rupees. Despite all the issues and the fact fact that there were gas curbs. The volumes have remained flat sequentially, and they're up 2% on a YOY basis to come in at 4.7 MMSCMD. The stock outperformance today at least came because it has not done much this year so far. It has been absolutely flat. This week so far, the stock is up 5.5%. Valuation-wise, this is one of the cheapest in the city gas distribution space. So yes, good numbers despite what we saw in terms of gas crisis during the West Asia crisis, and that's why the stock is reacting positively to earnings.
Got it. Okay. All right. Thanks a lot for that. Sonal, stock has actually come off, as Sonal mentioned, but at one point of time was bursting away with a gain of around 5%. Let's get in Ajay Tyagi, President and Head of Equity, UTI Asset Management Company, who joins us on the show. Hi, Ajay. Good to have you on the show. Thanks a lot for joining in. How are you feeling about the Indian markets? You know, it seems to be a split verdict. One saying that we are getting ready to give up this underperformance, but the other fear is, can we have the rupee as well as crude at 100 mark for longer than expected? And that will clearly ruffle the bulls. Which camp are you in?
Sure. So since your question is around, the direction of the markets, particularly in light of what's happening in West Asia, let's look at the history of crude and how Indian markets, particularly the Indian rupee, also have behaved over the last, decade or decade and a half. So if you recollect, around 2012 to 2015, when we had a war in Libya, crude was somewhere between $100 to $110 for about, I would say, at least 3 years, and if my memory serves me right, closer to 4 years. Of course, the first knee-jerk reaction was that rupee fell precipitously by about 15-20%, and that's why we had the first set of FCNRB deposits under the swap window by RBI, and we collected a huge amount, post which rupee stabilized. If I were to just draw an analogy here, I would say that we are in a very similar environment. Perhaps crude could remain around $100 because we know that the Iran war is facing a start-stop situation. I mean, sometimes it feels that there is a ceasefire, and then we once again see those, firing happening between the two parties. So let's even assume that crude remains around $100. At least historical context tells us that post the initial knee-jerk reaction, rupee does stabilize. And by the way, while we don't know what the final number would be, but there are initial signs that possibly by the end of September, the time frame till which this FCNRB window is open, we could collect something around $60 to $70 billion. That's good enough ammunition and firepower, for the RBI to defend. Yeah.
All right, take that point. So that's your view on the market at large. What about sectors? I mean, how are you feeling of about the earnings season so far? Not been particularly bad. In fact, this morning itself, we had Amish who joined in from BofA said that so far, from their universe, the earnings growth has been 12%, which is tracking much ahead of their expectations for the full year. And this has been in the middle of the crisis. So obviously, things are likely to, if not improve further, even if they stabilize here, this year double-digit earnings growth isn't too far or too far-fetched as an assumption. What are you feeling about the earnings sector so far? Earnings, and what sectors do you think are attractive to you?
So firstly, I'll completely concur with your views. The earnings expectations for FY27 are somewhere in the mid-teens range, and it does appear, looking at the first quarter, and we all know that the first quarter was impacted by the war, particularly the months of April and the first half of May were significantly impacted by the war on account of the consumer sentiment. And yet we see numbers which are fairly gratifying. So to that extent, landing up at mid-teens level for whole of FY27 is certainly a high probability event. And obviously what's also helping is the very weak base of FY25 and FY26. The other thing is that we are seeing some signs of the income tax cuts and the GST cuts that happened last year propping up the consumer sentiment. It was very evident in consumer discretionary like autos way back in October, November of last year, and that's flown through over the last 6-7 months as well. But we are now also starting to see signs of that in less discretionary categories and in some cases even staples, so to speak. So yes, all of this is only going to help in terms of earnings. To your question on which sectors do we like, I think, if we, and we obviously have to contextualize everything in terms of valuations. If we look at the private sector banks, I would say they are available at less than one standard deviation valuations. we have a case where the markets are still trading higher than their long-term averages. But here we have most of the private sector banks trade at, let alone averages, I would say less than one standard deviation of the long-term averages. So clearly there seems to be a disconnect, and we are of the camp that there hasn't been any lack of pricing power. There hasn't been any new competition which should warrant such a massive. So that's sector number one for you. Look, we are positive on IT, and it's not just because of our view on valuations. Valuations clearly are very attractive, notwithstanding the very recent bounce back that we've seen over the last 1 week. But we are in the camp that AI is going to be a net positive for the Indian IT services industry beyond the first few quarters, where it could be disruptive, just like any previous wave of technologies have been disruptive in the near term. But beyond that, the scope of work for IT services companies definitely increases, like we've seen in the past as well. So we find that to be, once again, a sector where the near-term news flow and the news flow on AI has completely led to disbelief about the growth prospects of these companies over the next 5-10 years. So that's another sector that we like. Lastly, consumption, because of reasons that I just mentioned. I think after last 3-4 years of weak consumption, certain moves by the government, I would say not just the income tax and the GST cuts, but the upcoming 8th Pay Commission plus the welfare schemes launched by the states definitely would impact consumption over the coming quarters and years. Yeah.
Got it. All right, Ajay, just to get some clarity on IT, you're sounding reasonably more optimistic, and you're pretty clear on that. Not sitting on the fence, it appears, as of now, but you're maintaining a positive bias. And I think as a percentage of your fund, I think it has close to 9% of weightage.
Yeah.
All right. So y'all are not the fund that is underweight. As of now, you're more or less in line with what the weightage is.
We are actually slightly overweight.
Slightly overweight. Got it. That's good to see. You spoke about consumption, actually. The street was bracing for a big IPO coming in, and it may not happen. We don't know with regard to these food delivery, quick commerce players. And in that sense, if I look at your portfolio, Eternal's one stock out there that's seen a big move. From the top, it was close to 400 rupees. At one point of time, we saw it close to 50 bucks as well. And post its results, actually, the street is believing that the bigger boys will actually do much better. And that's why the stock has done quite well. That would be one of your top holdings, right?
Yeah. I mean, you have the fact sheet with you very clearly, but I'm only afraid that I cannot be very specific on stocks. So, I won't be able to answer anything, particularly on any of the stocks in the portfolio. Yeah.
Spoke about consumption, but delivery theme, I think, is something that you like. And what is your view? Suppose this third player to get listed doesn't come. Will it be an additional fillip to this one?
So see, the big picture view I can give you, and once again, like I said, can't get too specific, but look, the big view is that, and let's say that I have no view on whether the IPO for the third player comes or it fails. The fact of the matter remains that the number 2 and the number 3 player have been in the fray for fairly long now. They've been in the marketplace for the last 4 or 5 years, and yet they don't have any paths towards profitability. So restricting myself only to the industry-wide view, our view clearly is that there are, very, very few players who will be able to maintain both growth as well as profitability at the same time. As of now, it just appears that, most of the players are either solving for growth, and when they realize that their profits are, when they realize that their losses are actually widening, they start to cut down on their cash burn, but that obviously comes at the expense of growth. And if there is, somebody who can solve for both growth as well as profitability, then you clearly know, where would the, market share gain land up. Yeah.
Damned if you do, damned if you don't. That's the conundrum that these guys are facing right now. And if you do both, then for investors, the valuations aren't coming any cheap. So, it's a very interesting paradox to be a part of right now, though. We'll continue our conversation for another time. Thank you so much for joining in. We'll leave it here with the news of the markets actually now picking some pace, up 50 points of the frontline index, and a large part of that led by the auto pack. We'll take a short break, come back, as always, get you a check on what the dealing rooms are saying. And alongside that, we'll also get you our tomorrow trade calls. Buy today, sell tomorrow.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Manipal Health Enterprises Limited launches an initial public offer of equity shares of face value of 2 rupees each in the price band of 560 to 590 rupees per equity share. Bid/offer opens on Wednesday, July 29th, 2026. Closes on Friday, July 31st, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 23rd, 2026. Available on the websites of the SEBI, the stock exchanges, the book running lead managers, and the company.
When the market moves, we don't just report, we decode.
From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC-TV18 Market Central.
For your daily source of market intelligence and wealth creation with a commitment to doing it right.
Juniper Green Energy Limited proposes an initial public offering of its equity shares. The 100% book build issue is being issued at a price band of rupees 214 to rupees 225 per equity share of face value of rupees 10 each. Issue opens on Thursday, July 30th, 2026. Issue closes on Monday, August 3, 2026. For risk involved and other details, please refer to the red herring prospectus, which is available on the websites of the company, the SEBI, the BRLMs, and the stock exchanges.
Welcome back. We have a bit of a weekly expiry element as well that will play out on the Sensex, because there's the weekly expiry today. But just pull up the, if you pull up the Nifty Bank as well as Reliance Industries, you'll see the Nifty Bank that was down 250 points. It's cut its losses to around 50 points. Now it's being a little bit volatile. But a good recovery is what we're seeing from the lows. In fact, it's on the verge of moving to the green. And the other one that we highlighted at the start of the show is Reliance Industries. That as well has been a bit of an underperformer, but it's now crossing that 20 DMA, which has been a mark from where it's getting some kind of rejection. So keep an eye out on both those two. Beautiful looking screen as we speak, 60 points up. Well, let's find out what's going on in D-Street chatter. Nimesh joins us to tell us what has he picked up. Hey, Nimesh.
Hi, Nigel. A bit of lackluster day of trade. Even the institutional activity seems to be on the lower side today. I guess the bigger momentum will come only when we cross 24,350, 24,400 on the upside, because that's been acting as a very strong resistance for the last many weeks. So that's the feedback as well. That, once we cross that level, you'll see a bit of short covering rally as well, not in Nifty but in the Bank Nifty as well. So that's overall feedback. From a flow perspective, as I said, a bit of lack of participation. But within that, the space which is seeing a bit of buying is metal names today. So it's not only individual metal stock, but across the board there is a bit of buying back in metal names in today's trade. Again, sharp reactions to earnings continue, and maybe because of why you're seeing the mid-cap index down 0.5% today. But broadly, it's been a lackluster day and lack of participation as well from large institutions in the broader market stocks today.
Yeah, but you would have dug out some news from somewhere. So tell us about the individual stocks.
Well, so that's the kind of pressure you put in, Nigel, every day, right? So the first stock on my list today is IFL Finance. That's been buzzing in trade in a relatively quieter day, up 2% after a large block. So 1.5% equity got changed hands. My sense is it's a FDI to FI trade. The largest FDI holder was a seller in today's block, and the leading long only FI was a buyer in today's block. So any disclosures could be quite interesting in IFL Finance, so watch out for that. The second name is KPIT Tech, down 10% in today's trade on large volumes as well. My sense is post Q1 earnings and a disappointing con call. A couple of large FIs have been seller. There was a block deal reported in yesterday's trade as well. Looks like with today's volume, there has been a clear out trade with those two large FIs. So watch out for any disclosure if there are any further blocks from those two FIs in KPIT Tech today. Third, couple of names whether it's buying, and both are metal names, Hindalco as well as Vedanta. So expect high delivery volumes on the buy side in those two names. And on the other side, GMR Airports and Siemens Energy, they both stand out in terms of delivery-based selling from the larger FI. So maybe that's the reason why GMR Airports is down 3%, largely on back of sell flows.
All right, take that point. GMR Airports now down about 3%. Siemens Energy down 2% as well. Thanks a lot for that, Nimesh. A bunch of stocks that we'll keep a track on in an otherwise lackluster market, as Nimesh said. But we are seeing some traction on the Nifty Bank, as earlier pointed out. And, the gains continue on a lot of these individual names as well. Balkrishna Industries started off straight off the blocks, doing extremely well. And now as we move towards trade, it's moved towards the high point of trade as well. It's up nearly 10.5% now. So a big move is what we're seeing out there. And Vedant Fashions is the other one which really stands out with a gain of almost 3.5%. That's obviously the one that runs the Manyavar range of retail stores. That's the one which is higher by about 3.5%. Good time to get into tomorrow trade then. Mitesh Thakkar joins in. Mitesh, what do you do in this market? Buy today or sell today?
Both. So I think Swiggy has broken out very nicely, and you can see that it's now managed to get past the weekly averages. So it's a BTST with a stop at 293.5 for targets of 300, maybe a positional call tomorrow morning as well. And Premier Energies is on the negative side, is breaking below its key support area of around 1,010. That's a STBT with a stop at 993.5 for a target of 965 to about 960.
Got it. All right. Mitesh, one quick word on Union Bank. Any view on that particular name? That's a stock that's gone through a bit of consolidation in the last 1 month or so. And the Nifty in that time actually has done quite good. Any view on this name?
So still in consolidation region, 177 is the breakout on the upside. That is where we had a closing on the 17th of April and the 10th of April. These are weekly closings. And it's basically doing a 177, 152 kind of a range. It's still in that range.
Inner range. Got that. Okay, thanks a lot for that, Mitesh. By the way, bottom of the screen, Vedanta Limited. Remember, all that, most of its share value comes in, or almost all of it comes in from Hindustan Zinc as of now. So, those numbers in that sense are relatively immaterial. Remember, post demerger, suddenly someone bid it up to around 350 rupees or thereabouts. But from there, it's seen quite a big correction from 350, 360, come back down to around 267 or thereabouts. Numbers not very, very material because you already have, Hindustan Zinc that has delivered numbers. But let's tell you about the other metal number that's going to keep me busy today, Tata Steel. We keep an eye on those numbers, probably come out by around 6, 7 p.m. odd. We'll update you on that. Revenue growth, we're expecting close to 9 to around 10%, in terms of a top line. The EBITDA number, will that pop up by close to around 25%, which tells you that margins could improve to roughly around 16% from around 14%. And the profit number will be all around the place. So, take that with a pinch of salt, but look at the operational performance. Now, we already had the provisional volumes that have come in there. And India looked quite good because there's a good growth of, high single digit to around double digit. Came in at around 5.17 million tons or thereabouts, which is good, compares with around 4.75 million tons. So the India delivery number was good. While the European business, well, out there, both Netherlands operations as well as the UK operations, actually the deliveries were a little bit lower. What are the factors that will play out? Well, coking coal costs, that will partially offset the benefit that we'll see of higher prices. So realizations could move up by 4 to around 5,000 rupees per ton, very, very roughly. And that's what mostly the industry number as well is. But coking coal costs could go up by around $15 per ton. So, that's the other part of it. The Tata Steel Europe EBITDA, well, it had moved into the green, but that could come back into the black. That's because of lower volumes in Netherlands. And also, we could see, though, there will be lower losses in UK. So the two big numbers that you'll be looking at for Tata Steel, since we already have the volume numbers, on India business, there'll be some improvement in the EBITDA per ton. 17,740. That's the important mark, around 17,500 to around 18,000 rupees. The other one that you're looking at is the European business, which we're looking at a negative number of around $15. So important to watch on that front as well. Outlook for the year, what's the outlook on debt number? All of that is going to be important. Tata Steel, Tisco, will it do the disco or not, is what we'll be watching out for later today. Mangalam couldn't resist that. But when we talk about the stock that you're tracking, is it going to be smoking hot?
It may not be smoking hot this time around, but as Abneesh said, that perhaps a lot of the weakness is priced in because the stock is down 30% this year so far, trading at levels last seen in 2017, so near a 10-year low for that stock, and trades at 17 times FY28 price to earnings as well. What are the key expectations here? 8 to 10% decline in cigarette volumes. We've seen numbers coming in from Godfrey Phillips, VST. So the sector itself is obviously struggling because of the big spike that we saw in cigarette taxes. 8 to 10% decline in cigarette volumes, but the EBITDA out there, or the EBIT out there, would decline even further, 25 to 35%. And the only shining part will be the FMCG business, where the revenue growth is expected to be between 12 to 15%, with margin expansion to the tune of 100 to 150 basis points. Put all of this together, you are expecting an overall decline of 12% in the company's revenue, 17,362 crores. The EBITDA falls a little more. 21% decline is what we're expecting, a little shy of that 5,000 crore mark, which would imply that there would be a margin gash of nearly 500 basis points. And you have the net profit, which declines by about 19% as well, just shy of that 4,000 crore mark versus a number that was closer to 5,000 crore same time last year. Cigarette price hikes would impact volumes, but at the same time, the operating profit for cigarettes is projected to plunge because price hikes were insufficient to fully offset the tax increase and mix shifts as well. The other two segments of the company, they may be dark horses. Agri-business, we are expecting revenues to decline out there because of vessel shortages and, the West Asia issues. But paper boards, gradual recovery seen out there anywhere between 3 to 5%. So, numbers not much expected, but then again, not much is, priced in as well. The stock's down about 30%. Any positive surprise, the street may perhaps latch onto that. But with that, let's go across to Sudarshan. We've done Tisco, Disco, ITC, whether it's smoking hot or not. But Sudarshan, will Maruti be doing a vroom vroom?
The biggest four-wheeler company or the biggest auto company of India is going to report its earnings for Q1 FY27 tomorrow. And like all the other auto companies here too, revenue growth is expected to be healthy, backed by strong volume growth. But the important part in Maruti would be margin front. We'll have to see how much margin drag here comes, and also what would be the outlook for the FY27, especially in the passenger vehicle segment, because company is a market leader. Now talking about the headline numbers, profit might see a fall of 13%. Revenue may see an increase of 36%, and EBITDA can jump by 12%, but margin can see a drop to 9.8% versus 12% in the same quarter last year. Volumes here also were up 29% YY, but on a sequential basis, it was flat, up 1%. Realization may increase by 5% YY because of the price increase that company had taken, but on a sequential basis here too, we might see a drop of 1%. Now going forward, exactly what would be looking for, or especially in the commentary, what exactly would be focused. First, what does company talk about on the EV? Because as of now, company just have one electric vehicle, that is e-Vitara, and as of now, it has been mainly catering to the export market. So what's the plan over there? Second, what's the outlook for FY27 as far as the passenger vehicle is segment? Because recently, company had talked about 10% growth outlook for the industry, but overall earnings are expected to be strong, especially on revenue front.
Got it. All right. Sud, thanks a lot for that. By the way, just keep an eye out on a couple of stocks in the broader markets. Z Entertainment, well, that stock has spiked up now. There's a camp that's extremely bullish on prospects, and that this one will actually, give up the recent underperformance. So that stock, in fact, is suddenly spiking away. Sudeep Bandupadhyay, market expert, joins us. Sudeep, everything is good at a price. Has Z come to that price?
Well, this is one stock which I tend to avoid, Nigel. There has been lots of ups and downs. The investors have time and again lost money in this stock. Yes, valuation does look attractive, and it has been looking attractive for quite some time. There was a bump up when they took that World Cup telecast rights, and it has been continuing since then. But I think I will err on the side of caution as far as Z is concerned.
Already you'll be cautious on Z, that's the view. But, what about, I don't know whether you track this or not, SML Mahindra. Sudeep, ever since the news that came yesterday where Mahindra Group will divest their buses and trucks business into this company, 2 days of 2 consecutive upper circuits of 20%. The stock is up 42% this week so far. Have you tracked it?
Well, I did, Mangalam, and I think it's from a Mahindra perspective, it's a very good step. The commercial vehicle segment will be very focused, needs a focused handling, and that's exactly what they're doing. And this SML Mahindra will now compete with Ashok Leyland and Tata Motor commercial vehicles. Obviously, they are much smaller. compared to these two behemoths. And we will have to track the performance. We'll have to see how they go ahead and handle the competition and establish themselves in this particular segment. So, at this stage, to get excited by the this corporate action would be probably inappropriate. And already, as you rightly said, the price has moved up last 2 days continuously upper circuit. So definitely not worth touching the stock at this stage. But interesting development, and we would like to keep this company under watch for some time. Let's see how this performs. This is definitely positive for Mahindra and Mahindra.
Okay, all right. We've got Bajaj Finance that have come out with this set of numbers, and I don't know what to say about that. I think the net profit number could include some kind of a one-off.
Exceptional, seems like
I
it.
mean, that's what it looks like. We'll wait by for further clarity with regard to the asset quality. What is the growth outlook that you're looking at, and any kind of commentary that's going to be important for Bajaj Finance. For the time being, we just had the net profit number, but it appears it had an element of a one-off out there. Our ticker team will get that number back for our viewers on the screen. Remember, the stock is, well, it's seen a bit of a correction, then it's bounced back from the low, but it's still a distance away from the recent high. So Bajaj Finance is the number that we're looking at. Mangalam, do you have the expectations?
We do have the expectations, but more importantly, we had the cheat sheet as well, right? Bajaj Finance always gives the first quarter update where the AUM growth was about 24%, deposits declined by about 5%, the customer franchise grew by about 16.8%, and the new loans booked went up by about 20%. Growth guidance actually moderated from the historical 25 to 30% to focus on asset quality, and brokerages, however, continued to remain bullish on the counter. So we'll try and get some more on that as well. And in terms of expectations, asset quality is expected to remain stable. Credit costs between 1.7 to 2%. Net profit growth expected between 23 to 26%. Obviously, so to that, we will monitor more. Or actually, there was no exceptional. If you look at the poll, the net profit is 5850 crores versus 4700 crores, rather 5986 crores versus 4700 crores year on year. The poll was a bit of a flashing mistake, I think. Our poll suggested a net profit of 5850 crores. So the net profit number should be compared with the poll of 5850 crores, and the number that has been reported is closer to 6,000 crores. So marginally better, largely in line with what the actual expectations were versus what was inadvertently flashed. So we apologize for that flash error. But if you look at the reported net profit, 5850 crores was the poll. The number is 5986 crores.
Okay, all right, Sudeep, that's probably the only number that we have right now. But what is your view, results aside, at around 1,000 rupees, 1,050 rupees, your view on Bajaj Finance?
Well, it's definitely a good stock from a long-term perspective. It was never cheap, and it will not be cheap. But if I have to pick up one NBFC, probably I'll go for Shriram at this stage. I think the valuation-wise and growth potential-wise and the amount of money they have raised in the recent past gives me a little more comfort in Shriram at this stage.
All right, so you are you prefer Shriram to Bajaj Finance. What about the jewelry space? Titan's been doing extremely well, but we saw a big surge in Kalyan. Now, last 2 days have not been very good for Thangamayil. Thangamayil actually has been one of the best performers this year so far, not only across jewelry space, but generally as well, up 200% despite a 20% correction that we've seen in the last two trading sessions. If you look at the current stock is down low, 2 days of lower circuit. The management commentary with regards to quarter-on-quarter momentum has been slightly soft. Do you think this dip is an opportunity to buy, hoping for recovery in the second half, or maybe stay away?
Mangalam, I normally advise staying away from these regional players. This is exactly the reason why I tell them, because the volatility is too much. It's very difficult to predict on a long-term basis their performance way forward. So whether it's a Thangamayil, whether it's PN Gadgil, whether it's some of the other smaller players, including Senco, I always have been, for many years now, been liking Titan. If you want to be in jewelry, be in Titan, definitely. Even at this price, buy for long term. I also have been liking Kalyan for a considerable period of time since listing, in fact. And I still believe that the correction we saw after both Titan and Kalyan declared or announced their business updates was unfortunate, and Kalyan picked up from the next day itself, and it's still on an upward momentum, and it deserves that. Their franchise led expansion model is very good from a balance sheet point of view. Their expansion into North India as well as West Asia is margin accretive. Also, overall, the business has been doing good. And Candier brand expansion will determine the future as far as Kalyan is concerned. So, if I have to pick something else other than Titan, I will go for Kalyan, not for Thangamayil, PN Gadgil or Senco.
All right, take that point. Just as we speak, the markets move to the high point of trade right now. 89 points on the Nifty. Sensex up by nearly 300 points. Remember, it's a Thursday, also the day of Sensex expiry, so there could be some moves out there. The Nifty Bank has now moved into the green. SBI is the one which is leading it higher right now. The Nifty well above the 24,300 mark as well. Take a short break, come back, get you more on the markets on the other side.
Jimmy?
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Manipal Health Enterprises Limited launches an initial public offer of equity shares of face value of 2 rupees each in the price band of 560 to 590 rupees per equity share. Bid/offer opens on Wednesday, July 29th, 2026. Closes on Friday, July 31st, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 23rd, 2026. Available on the websites of the SEBI, the stock exchanges, the book running lead managers, and the company.
Current phase.
The market zooming ahead right now. Coal India is the one which is spiked as well. And, moments ago, we did get the numbers from Vedanta Aluminum. At that point, the stock was just marginally higher. Now, as we speak, it's seen incremental gains. That stock's up 4% right now. And alongside that, we've seen some additional gains coming in on Exide as well, which has moved to the high point of trade. So along, all the lines, Nigel, we are seeing decent gains come by. And Z, that you spoke about, continues to gain some traction. Hyundai Motors, the auto pack is doing well. Hyundai was saying, I wasn't participating up until now, but going home with big gains at the high point of trade for that one as well. Look at that.
I don't know whether Sudarshan is going to be joining in and giving us a quick analysis on this one, but for the time being, a stock that had, the IPO I think was 1,700-1,800 rupees. It danced all the way to around 2,500, 2,600, and then it saw a correction. For the time being, no growth in terms of revenues. But I'll tell you what the street likes, I think, is on the operational performance. So actually, that as well is a little bit subdued. So we'll have to see on a sequential basis whether or not there is some improvement. For the timing, a bit of a pop-up. Profitability as well is down by close to 30%. I'm not sure whether or not we had the poll. If that's the case, we should actually get that number up for you. For the time being, the stock is going a little bit higher. Margins have come in around 9.3%. In the previous quarter, it was at around 10% or thereabouts. So margins actually have been maintained out there. We'll wait by further analysis, but for the time being, stock goes on with a gain of around 2%. Well, let's wind down the markets for you. Well, we go on with a gain of around 50 points. Well, not bad at the kind of global environment we woke up to. Mahindra & Mahindra, that reported set of numbers, the street liked, the stock goes up 2%. Coal India posted its numbers, that stock did see some selling. It's popped up in trade today. And Eicher Motors, kick-starting the vehicle, the thump is thumping along. Royal Enfield continues to ride strong. Valuations could be an argument, but that one, in fact, is adding capacity, going to around 4.5 million units in the next 4 years or so. And also the international revenues at around 1,000 crores in a single quarter. That's the first time ever. On the flip side, Adani Ports came in for selling. The street is worried. Are they going to be biting a very large inorganic growth, which could be larger than their size? That's the problem. That's weighing on sentiment, it seems. We'll have to wait by to see whether or not there is any truth in that report. But for the time being, the stock goes on with a cut of around 3%. HDFC Life as well, profit taking. That one was down by close to around 2%. From the broader market, stocks did a thing of their own. Sona, BLW, Precision, flying away, up 6%. TVS Motors, revving up the engine. Godfrey Phillips, smoking is injurious to health. The stock saw a big correction earlier this week, and today it was up and about in trade. The other stocks that were losing, KPIT Technologies, after the big rally yesterday, it saw selling. Prestige Estates as well, that was under pressure today. And Vari Energies as well went home with a cut of close to around 5%. Net, it was the day for the big boys, going home with a gain of around 50 points. Not too bad, one would have to say. On that note, though, we'll wrap up on this edition of Closing Bell. You don't go anywhere. The team of Markets Forward is waiting for you on the other side.